Good evening, ladies and gentlemen. This is time for the trade wrap of 17th of March 2021. My apologies about the video yesterday. I had to go to some sort of a party, and after coming from parties, you are in no state to think rationally. So, anyway, let's look at what the S&P 500 is doing. Interesting pattern here. If you look very carefully, you have a sideways range here. The market broke out of this range and is now trying to re-enter this range. Today is, FOMC meeting, so there will be some kind of volatility. But the issue remains that the bond yield is picking up steam. And right now, if you see, the US 10-year bond yield is continuing to rally, and in fact we've rallied quite a bit since our closing. So you have a bond yield at 1.681, and similarly if you look at the dollar index, again that is also fairly high at 91.93. So we've seen that whenever both these things are rallying, emerging markets tend to decline, and that is what we should expect for tomorrow. Uh, Before we move forward, like, share, subscribe if you like the content and if you find it useful. I would think it's a reasonable request. And for join button services, we have platinum, diamond, gold, silver, copper. It's been extremely treacherous to say the least, and having some sort of hand holding would pay off. So if you have questions, 9871066337 is the WhatsApp number. You have email at ashwani_gujaral@yahoo.com, or you can straight away go to the YouTube channel to subscribe. The features are all given there. You have products across time frames, etc. And it will be useful to have this sort of guidance. Now let's go to the Nifty, and let me give you a very interesting insight. Basically, let's look at the hourly chart. Now on the hourly, you have upswing, downswing, again upswing, downswing, and this third upswing terminated midway, held on to the 20-day moving average and has started to collapse. Whenever from a sideways market, any index, stock, etc., terminates the swing in a particular direction and starts to move in the other direction, generally speaking, it is beginning to trend on the other side. So that way, this was a hint that 14,750 will get crossed. And I think in a fairly short order, maybe as early as tomorrow, you should be at 14,500. So that being said, on the Bank Nifty, we have today broken the lows of 34,470 that we made earlier. Now on the bank nifty, the interesting bit is that just look at this area, this vertical rally, and the bank nifty is now entering this vertical area. So chances are that it will decline also in a similar manner to the one that it went up on. So bank nifty again now rallies towards 34,500 should be used to sell into the bank nifty. The nifty, I would think any rallies towards 14,750, 14,800 should be used to sell. As a disclosure, we have carried home 14,800 puts in the hope that the Fed chair probably says something, or the market uh, you know tends to catch something negative and you have a large decline. If that doesn't play out, the market in any case is weak enough to move on the downside. In terms of pivot levels, Nifty pivot for tomorrow is about 14,791. So about 14,800 is your pivot zone for tomorrow. On Bank Nifty, it is about 34,484. So exactly the sort of levels I had mentioned. Now let's have a quick look on the options data. I think massive amounts of call writing at 14,800, 33,000 contracts were added. At 14,900, 20,000 contracts. At 15,000, about 15,000 contracts added. And you can see how light the put side is. So unlikely that you find significant support before this 14,500 zone. So my sense is, given the bond yield and the dollar index right now, you should have a fairly strong down day tomorrow, regardless of whatever the Fed says. Because the issue is that inflation is picking up. You can deny it, you can, kind of move around it. See, on Bank Nifty 34,500, 17,000 calls were added, 35,000, about 8,000 contracts were added. Again, hardly any put writing. The put writers at 34,000 are running. This is negative 8,000. So 34,000, which people were expecting as a strong level, will not get broken. Now has covering of those put positions. So the Bank Nifty is the weaker index, likely to have another severe fall. So unless expiry can save the indices, unlikely that you will see any respite, and possibly going into the final week, the Nifty and the Bank Nifty are going to come down substantially, because 14,750 was a erstwhile support. Basically 14,750 was this level here, and today we have broken this level. So basically the market was holding on to this kind of zone, and this 14,650, 750, once this is gone, you will have a fairly strong decline further towards 14,000. So uh, that is a kind of downside you should be ready for. Bank Nifty can easily fall another 1,000 points from here. So 33,000 is likely to come. And now we'll stop at regular intervals. But my guess is that there should be more declines given the way bond yield and dollar indices are moving. That should be it. Take care, trade well, and please consult your financial advisor.